The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
So the question has been raised by a few people, why don't we see new construction like we saw when the church was going through its massive expansion with the Michelangelos and the Rubens doing phenomenal artwork, and we have these massive landmarks, some of which were destroyed during the World War II and World War I, but many have been restored, and they are clearly wonders. Just to imagine, how did they build these without the technology that we have today?
How they ever, not only how they imagine it, how they actually pull that off. And it seems almost like it was impossible to do then, because it would almost be impossible to do now, but it happened. And they built these unbelievably gorgeous monuments to art and to science and to religion. And we don't do much of that in the same way anymore.
No, we build things, but we build them much differently. It's not so much the building as a monument to faith. It is technology that is building access for people to have higher standards of living than many ever dreamed of. And now people who have dreams that their parents could not have imagined. And we see that with people migrating from poor countries to wealthier countries just to improve their lives. And it's made possible because we have built technology platforms that have expanded the operation and the efficiency of economies around the world. We see that in individual companies, many of whom are larger than the economic output of standalone countries. You made that observation.
Yeah, it's huge. We're talking about the Magnificent Seven in the stock market these days, and those companies are so enormous that it's hard to kind of get your head around it. That you can go out and buy a share of Apple if you want, and Apple's roughly the same size as the country of Japan. It's as big as a country. Microsoft is bigger than the UK. Google is just about the size of the entire French stock market. And you can run out and just buy a piece of those. So the barrier to entry is astoundingly low to own a company that has essentially become a country-sized economy unto itself. It's an amazing thing that's occurred. That's as big as anything that was ever built. It's just no longer the bricks and mortar. How long have we heard that, right? The bricks and mortar are going away and everything's virtual and going online. Not as pretty as the Sistine Chapel, but every bit as amazing.
Well, the fact that they've been able to put these companies together and continue to provide product and improve our standard of living is when you think about the size of it's a behemoth project or an accomplishment. So you mentioned the seven companies, Meta, which used to be Facebook, Tesla. These are kind of the newcomers here that are up and coming, if you will, as far as dominating the markets. And they've achieved their position because they've upset the way things normally work. And people had to rethink, how do we do this now? We have different tools. They're more efficient. They're perhaps more interesting, but our application is different. And in the process, we expand our own lifestyle choices. And when you think about it,
when you look back at the growth, Don, it's just astounding. 10 years ago, those seven companies together were worth $1.5 trillion. The seven of them together. Today, about $12 trillion. So they've virtually added $1 trillion a year for 10 years. every year. The growth has been phenomenal, and it makes you stop and wonder. So does that continue on? Probably not for all of them, but there's good reason to believe that in that group there's going to be another big winner that may double or triple in size from where it is now, which is an amazing thought, seeing as trillion-dollar companies didn't exist just a few years ago, and now there's a list of them. It's amazing.
So one of the things we've noticed as the market finished the year with the Santa Claus rally is that these seven, the Magnificent Seven, were basically moving sideways. The
Yeah,
market was broadening out with people paying more attention and putting money into areas of small cap and mid cap companies and in industry groups or sectors other than technology. Some technology was still a magnet for money. That's my key phrase for what causes
yeah,
leadership. So
yeah.
semiconductors were still attracting money because you need semiconductors to make any of the technology work. That's one of the things that NVIDIA has been benefiting from. But we look at the small and mid cap stocks, and they are continuing to attract more capital. So with the run up that we've had in the last 3 months of the year, and we see the flattening of performance in the Magnificent Seven, it's actually a positive sign for the market to be able to have the foundation for reaching new highs as we work our way through 2024. And I say work our way through because we cannot take the last 3 months and draw a straight line continuing to rise to new highs. It is going
Right,
to have some significant pull down as people take profits because the normal reaction is it can't go any higher than this. Look how high it's gone. I mean, that's just too much. And
correct.
so we see people selling. The other thing that we see is that retail investors have not been jumping on the bandwagon. They've actually been taking money off the table, and it may be because they're finally after 2 years getting even. And the S&P is basically flat for 2 years in a row. The only real excitement this last year was getting out of the hole from the prior year.
Correct.
We don't want to keep doing that. The buying that's significant is institutional buying. Institutions have been accumulating stocks, anticipating that we get through this rough patch of the economy and inflation, and that in 25 and 26, the big companies that manage money, that's what they're buying for. Retail investors are still on the sidelines, and we expect them to show up this next year, providing some impetus to move on to new highs. The Dow's already there with an all-time high. The S&P is really close. The NASDAQ has a lot further to go. We don't expect the Magnificent Seven to be the strong leaders forever. They have been for 20 years, and that's a typical business cycle let's call it an industrial revolution. It's a technology
There you go.
revolution in this case. But we go back to the Industrial Revolution, and it was almost 200 years before we moved beyond man and machine have accomplished something. It's now computers are accomplishing things that neither man nor machine were possible uh, 20, 30 years ago.
Correct.
Now we have this next innovation, which is AI, artificial
And
intelligence.
we've already they've already been in a growth phase that is just unprecedented in the history of business with the size that they've already attained, and to think like you said, Don, that they're all going to just continue in a straight line is not realistic. Somebody's going to stub their toe. Somebody's going to pick the wrong direction and not make it, or some other company is going to come in and just leapfrog an entire technology base, and someone's going to be marginalized. It happens all the time. They are ripe for it right now with the technology like AI coming online. It's impossible to tell winners and losers at this point, but there are going to be winners and losers, which is why it's so important to be very careful right here, and don't make a big bet on one company because the story sounds like it can't miss. Any story can miss right now. We just don't know how this is going to shake out, and it's a time to be in the market. It's a time to be in technology, but it's a time to be very cautious about getting too loaded up in one direction because we don't have a direction yet. Well, we just know that the Magnificent Seven has done very, very well. Parts of it are probably going to continue, and we're going to get some new entries in there, and we don't know where that's coming from.
Well, even the things that you think are going to work will collapse.
Right, right.
One of those is the electric vehicle problem, and it's a
They're
problem for
having
the
trouble. Yeah.
automakers. I mean, this has been
Yep.
driven. Well, actually, we can go back and take a look at the technology bubble that we had in the late 90s. That was driven by government interference, mandating that companies, anybody they could regulate, had to go out and replace their computer software and computers in anticipation of financial and technology collapse with Y2K. Remember those fears? you, for
The
three
world was going to
years,
grind to a halt. Yeah.
the banks won't open, your cash machine won't work, you won't be able to get your checks processed, payroll is going to come to an end. I mean, it was Armageddon right on our threshold.
It
And
was. It really was.
actually, the DOS system actually worked. All you had to do to test it was to reset your computer clock for 5 minutes before midnight of Y2K, shut it off and turn it back on and see if it still worked. You had to wait 5 minutes, but you found out that it did. In fact, we have a
Oh, look,
business in
it's
town.
fine.
We had a retail business here in town that I do business with, and I'd be in there, and I think it was probably '04 or '05 before they converted away from DOS. Their entire checkout system was an inventory was still on DOS-based computers. Y2K was government interference that created that bubble. And we ended up with government interference with COVID, with the mortgage market debacle back in '08 and '09, and we have it now with electric vehicles, trying to bribe people into buying something that isn't quite ready for prime time.
Doesn't
And
really exist yet. Yeah, it's hard to buy into it at that point, but that's where we are.
but we're going to find some companies make major mistake. I think of Volkswagen, who, despite the fact that electric vehicle sales are falling, they made a commitment a year or two ago that in '24 they aren't going to sell conventional vehicles anymore. They are 100% EV. Whether or not that's a good thing, right now it doesn't look like such a good bet. There's a company, excuse me, there's a company trying to build a battery plant, I believe in Wisconsin, and the community is up in arms. They don't want those jobs there. Well, there's some pushback here. We don't know how this is going to fall out. On the
Correct.
truck side, you have four major suppliers of vehicles in the United States, and they aren't competing on price. There's no price pressure to cut these prices back down to move vehicles. But Rivian and Tesla are ramping up truck production this year. And Tesla, my goodness, with 2 billion in cash and a history recently of cutting prices to maintain sales, I think the auto industry is about ready to have a wake-up call on how that's going to work. And that's not something that was expected a year ago.
Not at
So
all.
that's the impact of this changing technology. You just simply don't know where it's going to unfold.
Correct. And that's true. I mean, Elon Musk said out loud he never expected Tesla to still be in business. He thought they were going to take a step towards electric vehicles, and he wanted to be part of building the foundation for how that would work in the future. All of a sudden, the company takes off, and they're the biggest car company on the planet, capital wise. And he was as surprised as anyone. Being there from the start, had no clue. He assumed there was no chance that that company could even continue to exist, and then it becomes the cornerstone of the EV vehicles worldwide. So it's hard to gauge. It's hard to tell what's going to happen, and you kind of have to buckle up and go along for the ride because there's no way to tell where it's heading.
Well, his Model Y is the number 2 selling vehicle in the United States. Number 1 is the Ford F-150. That's very likely to change. But here we are as we start the new year, change is in front of us. How
Yep.
quickly we could see a move into new all-time highs in the major indices is unknown, but the data we review looks supportive for it to happen. Just
Correct.
remember, it's not going to be a straight line getting there.
Yeah.
That never happens in the stock market, except maybe overnight. You're going to take a look at your chart when something collapses, or
But
there's an
don't try to look any further out than that. Just try to gauge what's going to happen maybe tomorrow. Don't get any longer term. Next year it's going to be a bumpy ride.
So our process is basically to look for the leadership, and when leadership changes, the portfolio should adapt. There is no such thing in a dynamic market as a long-term hold unless you're willing to make significant drawdowns in your portfolio just part of your routine. If you're
Correct.
just getting started, yeah, not such a bad long-term impact. But if you're already close to or retired, those large drawdowns can last for decades, and you don't want to be there if it's because of a technology change and you just didn't want to switch horses because you thought
Yep.
your horse was a winner once and it'll be a winner again. Not necessarily so. You have anything you want to add, Perry?
But we're good to go. It's time to wrap that up.
You want to subscribe? Click the button down below. You'll be notified when we post our next one. And look forward to having a happy new year and great returns.